What's up, y'all? It's Charles Jimenez, and the goal of this channel is to educate and inspire young people to be more financially educated and get people headed in the right direction so they can start building wealth for themselves and for their families. Now, my demographic target is mainly going to be people my age, right? I'm 27. I've done a lot, but being a millennial, I can relate to a lot of other young people trying to navigate through this world with understanding how credit works and how to buy things and what it means to have savings and investments and 401ks. And this is what this channel is for. So for those of you millennials, my age, and even for the next generation, Generation Z, they're coming up. You know, if you were born in 1995 and up, you're Generation Z. You ain't a millennial. So Generation Z is the new young generation. This is going to be specifically targeted to those people. And now if you 30, you 40 years old and you get value out of this, cool. I doubt that you're going to be 50 watching this, but if you do me a favor. Comment, like, share, and subscribe. If you like it, hit the bell button. Pass it along to your friends. Let everybody know that this is going to be the best, most educational, most informational, hopefully the most entertaining channel when it comes to finances on YouTube, period. To give you a little bit about my background, I am a licensed mortgage loan originator based out of Georgia and South Carolina, which means that when people need a home loan, I'm the guy that they come to. Whether it be an investment property, whether it be their own primary residence, when they want to go get one, they come talk to me. Today, I want to start off talking about the basics. The basics. We're going to really just kind of dive right in to some general understanding about what is a mortgage. For those of you Gen Zs and millennials, maybe you've never bought a home before. Maybe your family's never bought a home before. Maybe you just want to start figuring out what's the next step in life. You're tired of renting, but you don't know what to do. So let's talk about what a mortgage is. A mortgage is essentially a loan secured by a property. Now there's different types of mortgages, there's different lengths, but we're going to talk about the average loan, the average mortgage, which is going to be a 30-year fixed rate loan. What that means is that once you pick out a property or a home that you want to move into, you agree to terms, and you finally get everything closed and finished. Let's say your house costs $100,000, right? During that time frame for the next 30 years, you're going to be paying back that $100,000 you borrowed to buy that house in installments every single month for 30 years. Now let's talk about what a mortgage is comprised of. What are the basic components of a mortgage? There's four things. The traditional mortgage is going to be comprised of one, principal. Principal is going to be the amount that you borrow. So the original loan amount, for example, is $100,000. That would be the principal amount. Over the course of time, as you pay back that loan, the principal amount or that balance is going to go down. It's going to be reduced. Every time you make a monthly payment, it's going to go down. That's your principal. You also have interest. Now, a lot of people think that they get loans for free. It doesn't happen. Whenever you take out a mortgage or any type of loan, you're going to have to pay interest. The interest is determined by your credit. We'll get more into that in later videos. But for now, just know that first you have your principal, which is going to be the balance of the loan. You have your interest, which is going to be the amount that you have to pay the bank to borrow that money. The next two portions of the traditional mortgage are going to be unrelated to the actual loan, but they are still major components to a mortgage. And they're going to be your taxes and your insurance. So taxes are going to be evaluated strictly based off the value of your property and the location that it resides. Taxes could have a multitude of different things involved with it. They could have your county taxes for schools, things of that nature, but they're unrelated to the actual loan, but traditionally they're going to be rolled into your mortgage so that it's easier to collect everything at one time so that it can be distributed to the appropriate parties so that you're not making multiple payments and getting confused. And the last portion is going to be your insurance. The insurance is actually what protects your investment. They call it homeowner's insurance because it insures against multiple different things. For example, if your stove caught fire in your kitchen and your house burnt down, your homeowner's insurance policy would pay for the repair or even the entire replacement of your house. But secondly, it also protects the lender because without the insurance, they're not going to give you a loan because for whatever reason, if your house blows away in a tornado and you don't have insurance, the lender is then going to come after you so that they can get all their money back. But if you don't have the money to pay them, they're out. So you have to have homeowners insurance when you buy a house with a mortgage. So those are the four main components comprised of the traditional mortgage. There are other alternatives, but today we're talking about the traditional mortgage. 30 years with principal, interest, taxes, and insurance. So what are some examples of when you would actually go out and get a mortgage? So you're looking at a home and you want to move into and you're tired of renting. Well, the first step is to meet with a qualified mortgage loan officer. Somebody that actually knows how to structure a loan that would best fit your circumstances. There's many different times where maybe a traditional 30-year fixed rate mortgage is not the best situation for you. But you need to talk to somebody that can give you the right advice and the right guidance in regards to what you are looking for. Now, how do I qualify for a mortgage? Step one of qualifying for a mortgage, you need to have some form of credit established. Credit meaning your proven track record of having the ability to pay somebody back in an agreed upon manner. So whenever you have a car loan, when you have a credit card, when you have student loan debt and you're making payments, that inherently builds your credit. So when it comes time to buy a house and secure a mortgage, you will then have the necessary credit to start the process. Another thing you're going to need is income. I've heard people talk about it and say, well, I want to get a house, but they don't have a job. Those two things don't work. Unless you're going to pay cash, you cannot take out a mortgage and buy a house. So first step is one, start building your credit, and two is have a job. And have a job for a while. Don't just decide at 18 years old that you're going to go get a job and then decide I want to go buy a house. Maybe you should figure out if you're going to be at that job for a while or how much you're going to expect to start making for a reasonable amount of time. So those are a couple of things you need to look at before you even go out and get a mortgage. So those are the basics of how a mortgage works, and those are the key components that makes up a mortgage. I hope y'all found this informative. If you liked what you saw, if you found this to be informational, please do me a favor. It takes a lot of time to make these videos. It takes a lot of time to do the research. If you liked it, hit the like button, hit subscribe because there's going to be a lot more. Share it with your friends. Comment below if you have any questions or you just want to say, hey, I'm always here and available to help. Once again, I'm a licensed mortgage loan officer based out of Georgia and South Carolina. My name is Charles Jimenez, and you can hit the links below. I'll have somewhere tied to my social media accounts. And if you have any other questions, you can always feel free to reach out to me because I'll be here to help. So until next time, I'm going to holler at y'all. Y'all have a good one. Let's get it.